All right. Hello, hello, hello. Let me see here. Just give me just a brief moment. I want to make sure the recording has started. That is about as zoomed in as you can get, huh? All right, I'm going to share the screen here real quick. We're going to get started. For those that could not make it, I just want to make sure that we keep this somewhat short so that they have the opportunity to watch it later and they don't have to watch through tons and tons of sort of pre-show stuff. So we'll get started, and then if there are any questions, we'll save it until the end. Wherever you're joining us from, I can see that you are here and have questions, so I'll be sure to conquer those. Let me share the screen. Let me know when you see it. Share the screen. Ta-da. It should be up. Everything should be good there. So I'll just pull this over. And we're going to get started here real quick. So we've got two new funds here that we're announcing. We actually have a lot of different funds that we have here at jazzWealth. We just haven't been able to make them public at the speed that we want to. So that's all changed. Basically, as we go through each fund and we kind of get everything approved by the regulators, we can release all of it. So everything from fundamental type investing, if you're interested in things like that, to target date funds, we want to include those as well. But more importantly, I want to be able to show the performance. I want you to be able to understand what you're getting into if you decide to use one or the other funds. And then at the very end, I'm going to show you what our website looks like tomorrow as we're launching the performance and what it looks like there, so you'll know where to go when it's live. So let's get started. The first fund that we're working on, or that we're going to be putting out there, is we're calling it the Aggressive Stock Fund. Now, most of you that have been in an aggressive position, or you want the sort of growth approach, right now you have a bunch of exchange traded funds making that happen in your portfolio. The goal there is to try to keep up with the market, do better when we can, and we always adjust to make sure that we have the best sort of diversification for you, but give you that aggressiveness. This fund aims to take it further. We have taken it further. The goal with this fund is the most growth that you can possibly get. It's something that we've spent a lot of time on. We've used for a lot of clients, but now we can actually bring it for everyone to do this. So the objective really is those of you that are younger, have a long time till retirement, or have a longer term investment horizon, now you're able to be a part of a fund that we're managing that the goal is to outpace the market. That is simply put. I'm actually going to go over with you how we do that. So when someone tells you you can't beat the S&P 500, it's just false. They just don't know how to build a portfolio. They've actually probably never done it. So the idea here is you are going to have a level of risk, as indicated by the nice little speedometer thing there. You're going to have a level of risk that is greater than the market. For example, when the market goes higher by 1%, you will see growth greater than 1%. When the market falls by 1%, you will see declines greater than 1% until we can adjust. I want to show you exactly how we go through that. But the idea here is that you want growth greater than the market. You are willing to accept more fluctuations in your account. You will not lose sleep if the markets fall aggressively one day, and so does your portfolio. That's the goal here. So you really need to understand, if you're going to participate in our aggressive stock fund, we are using individual stocks to do that. It will be more volatile than anything you've experienced here at jazzWealth, but the growth will also be there as well. Here's how we go about it. If you guys are a bit of stock geeks, or if you like portfolio reviews, you like to try to figure out how things work, basically we've screened every security, every stock that's out there. We found stocks with betas between 1.2 and 1.5. If this means nothing to you, just tune out for a second, no problem. But part of the deal was they had to have a market cap of over 500 million. So if you're trying to figure out what stocks are going to be in this portfolio, first of all, I'll just tell you, there's no secret there. But if you're trying to figure out sort of what types of stocks that could be, here's one way you could look at that. They have to have a beta greater than 1.2, but no higher than 1.5, and they have to have a market cap of over 500 million. What that tells you, beta, just means it. What the sort of definition of that is relative to something, how much does the other thing move? And what we're saying is relative to the S&P, how much faster does this stock tend to move? And we require that it be between 1.2 and 1.5. We generally will not go over 1.5. That is sort of our cap. As long as we have at least 30 to 35 stocks in this portfolio, then we're happy. If we find that we can't do that, then we will adjust to make sure that we add more, we'll widen our sort of approach if that's what's necessary. So that's that. Then basically what we did is go through each stock that has the largest market cap in each sector, and we weight it relative to the S&P 500 sector weights. So if you're familiar with sector weights, for example, like technology is 26% of the S&P. You've heard me talk before about the financials being such a big portion, now almost 15% of the S&P. So you understand that the S&P 500 isn't 500 evenly distributed stocks. They are in different sectors, and in these different sectors at different weights. So again, if I've just horribly confused you, I'm sorry. But that's something that's important to point out, because some of you are very detailed about how portfolios are put together. I want to share that with you. Then what we do from there, once we have that list and we kind of can't contain that list and keep going with it, is we weight the holdings, your individual allocation, almost evenly across the entire portfolio. So if you subscribe to this one, you want to be a part of this portfolio, you'll notice that you're basically evenly distributed. It's the individual picks that are sector weighted. And right now we have 30 stocks that are going. We had 31, now we're down to just 30 to maintain this sort of speed. Now I want to show you the performance overall. These are our charts that we're using here for this, because it's important to know how this can go, right? I don't want to sugarcoat this. This is a very aggressive portfolio. Over the last 6 months, what you really want to take a look at here is the solid blue line. That's our fund. The light blue line sort of in the background, that's the S&P 500. So you can see our goal is to sort of outpace the market. Even though the markets have been really choppy here lately, we've been able to stay just ahead of the markets as far as performance goes. But this picture just shows you, yep, we are staying ahead of the market. If we go out to the 5-year time period, this is how we've performed over the last 5 years with this portfolio. Don't let this deceive you though, right? The idea that we have outpaced the market with this portfolio, because if you zoom in just a little bit, if we go down to the 3-year, what I want to point out is, and I'm going to back up real quick, see this window, I don't know if you can see the cursor, but between sort of November and November 2015 to March 2016, where the markets actually fell fairly aggressively, this is that window now that you're seeing on the 3-year. It will underperform the market. When the market does fall, there is some time where it takes to catch back up. And that's just us adjusting in there when things start to pull back. Because our goal for you is when the markets fall, we try to adjust so that you take as little hit as possible. But when the markets are moving higher, everything's sort of cranking along, we want to just max that out, just pedal to the metal, get as much as possible. So there will come a point here where the markets start to pull back. We've already seen it a little bit. And as the markets do pull back, if I go back to the 6 month here, when the markets fall, there will be periods where we fall just slightly faster. If we do our job for you, then we're keeping you sort of less to the downside than the market would. And we did really good with that through the last downturn. So that's one thing there. I do want you to keep that in mind, that that's how it works. So that's our aggressive stock fund. Now, let me go over here. Let me pull this up. Okay, perfect. So taking it a step further, this is what you'll see on the website. This is going to be updated each week on our website for the total portfolio performance. It will break down how the S&P 500 has done, as well as how the portfolio has done through the different time periods. One important thing I want to point out, and I'll do this again tomorrow in the live class, just this performance part here. See at the very bottom where it says 1 year volatility. We watch that like a hawk. That's one of our biggest metrics around here, is how volatile is our portfolio relative to the market. Remember the beta explanation I just did a minute ago? Well, it's important there that our volatility remains higher than the overall market. So we're really close right now. And that's really because the markets haven't moved a whole lot over the last now 2-3 months. So you will see as this goes that our volatility overall is always going to be greater than that of the market. That's one of the reasons why we beat the market's performance in the long run, is because we're taking just a little more risk. If you choose this fund, that the risk is defined, right? Our beta, we don't go full blast on beta there. We're 1.2 to 1.5 if you're geeking out on those numbers. And these numbers currently are updated as of yesterday. Tomorrow when I post them, they will be updated as of today. So that's the aggressive stock fund, first fund that we offer through the mix there. It has 30 individual stocks in it. at the moment. And you'll see it on the website. I'm going to show you a sneak peek of that here in just a minute. Let's move on to the other one. That's our dividend focused fund. So a lot of you like dividends, and exchange traded funds are good for that, but they're not great for that. So if you like the idea of constantly getting dividends and reinvesting those dividends, we wanted to make sure we could sort of publish something for you that has this. So we had a dividend portfolio. Now it's out and available. And basically the goal here for the dividend portfolio is for people that will accept a little bit of volatility, right? Notice the speedometer there, which you'll see on the website. You don't want pedal to the metal. You want to back off a little bit. So you're okay if you don't beat the market. That's a big one here, but you just want those dividends. You want that to keep going, and you want to always know that you have dividends coming in. Now, here's the cool part. The goal basically is to find the highest paying dividend companies out there and always have those in the mix. There are 100 stocks in this portfolio. So to give you a good example, if you were to do this at another brokerage firm, or you have another account that you're having someone else manage, or you're managing yourself, it would be virtually impossible for you to keep up, because every time you placed a trade, it would cost you $4 or $5, right? And so you'd end up spending hundreds and hundreds of dollars to try to have a dividend portfolio. Remember, here, you don't pay those commissions. We never charge you trading commissions. So we can have 100 stocks. I think we have 101 in there at the moment. We can have 100 stocks. We can move stocks in and out as we need to, and it doesn't affect you one bit. You never, ever pay more for that. That's one of the reasons you're here with us. But the goal here, you can read through the sort of description there. It'll also be on the website. Really, the simple answer, dividends, right? If you want dividends, you don't want market level performance, or if you decide you want some dividends and some aggressive, right? You can mix this stuff up a little bit too. This is what the dividend fund is all about. Here's how we go about it. We're looking for the largest 100 stocks that are out there based on market cap, and we want the highest dividend yield. So basically, you can go through the explanation. I don't want to bore you on some of the geeky stuff, but after we've run through how we build this up, we do have 101 stocks in it right now, and we will adjust this as much as need be to make sure that we keep both the volatility. We don't want a portfolio that's too aggressive, but keep the highest possible dividends that you can get that are currently available to you to make them in your portfolio. So here's the performance over the last 6 months, and you want to notice something very much different here. When the markets go sideways, this fund will not keep up with the market. We've just something we've played with over the years. When the markets go sideways, this fund will lag behind just a little bit, and that's because we're not picking the most aggressive. We're picking the highest dividend stocks. A great example would be something like Verizon right now that's in our portfolio. Verizon is sort of underperforming a little bit. Nothing crazy, but it's underperforming, and that's holding back the performance. There's a lot of other stocks like that as well. In the meantime, those dividends are still coming in, and so that's what's keeping up this performance in the portfolio. If we go out to actually this is not 6 months, this is 5 years. So this goes out over the last 5 years, not 6 months. I'll change that. You can see how basically it keeps up with the market. You are not going to outpace, or if you do, there won't be many periods of time or long periods of time where you outperform the market. That's not the goal of this one. The goal is the dividends. And so on the website, this is the dividend performance that we're going to be posting on our website. You can see the first thing I want you to focus on is that bottom line, the volatility. We actually want that number to be closer to 8 or 9. That's kind of our range. It's a little bit higher right now because the markets in general sort of have settled in. There's not a whole lot going on. And so that number is actually reducing for us each day. We track this each day. We'll post it and update it each week. Of course, your account, you're always welcome to look in there. You can see your performance anytime you like. But what we did is we're trying to bring that number down. So just know that we have those 101 stocks in there. We're adjusting to bring that number down just a little bit. We like 8 to 9. That's kind of our sweet spot. But basically, this is the performance of everything that has happened thus far. Again, this is not for the one where you say, yeah, I want to beat the market and get dividends. I haven't found a way to make that happen. And some of you guys know, you've conversed with me back and forth. You know how geeky I get about this. You know the systems we have in place to analyze, build, test, and perform. And we just haven't found a way to do it. So if you happen to know a way, we're happy to build a portfolio with you. We'll even name it after you, but I don't think you're going to find anything like that. Now, if you like one of these two portfolios, or you just want to change the portfolios that you currently have, there's 4 that you had the ability to choose from. If one of these sounds interesting to you, or you want to test the waters and say move from one portfolio to the other, support at jazzWealth. We have to have you email support at jazzWealth. Now, me and you can talk about it. If you're one of my customers, we can talk about if this is a good thing for you, okay? But the physical request, right? Regulators were very clear about this. The physical request just has to be documented from you. We need you to just send an email to support at jazzWealth with your account number, the one that you want us to use. If you have multiple accounts, the one account that you want us to change, or whatever account it is, we need to know that. And we need you to actually type out, I would like to change from my current portfolio to this one, or I would like to put 20% of my current IRA or retirement account, whatever it is you have with us, into a certain portfolio. We'll be happy to do that. It's just we have to have that documented. And we're going to change that pretty soon. That's going to be even better. But for right now, that's how we have to do it. If you're interested, again, we can talk about it. If you want to send me an email asking if it's a good fit, or talking a little bit more about how this one is going to work for you, happy to do it. No problem at all. But the request, support at jazzWealth, please don't send me the email. I will not be able to accept that request. Okay, that's about it. I wanted to wrap that up, make it quick. We're going to announce the performance page tomorrow, but I'm going to give you guys a quick sneak peek of it because it just got finished. All of it just got approved. So if I go over here to the screen, max it out, this is the page. What you're going to see, it's actually not available for you to go get it at the moment, but it'll be under services. It will be the very first tab. It will be our portfolios. As you're going through here, it is sort of indicates the level of aggressiveness. Here is our aggressive stock portfolio. We'll go through that tomorrow and show it. I'll just show you real quick. It looks just kind of like we put on the screen there. Tells you exactly what happens inside of it. We did go ahead and post how are we building this portfolio, how are we managing it going forward, and then of course the performance that will update there. But these are all the other portfolios. If you're actually new to jazzWealth and you just kind of decided I want growth and we put you in the aggressive ETF portfolio, well, the performance is going to be there as well. But you may not have even figured out yet or had a chance to take a look around. There are more conservative portfolios along the way, even down to the low volatility, where our goal is really protection rather than growth. So tomorrow, 1 o'clock for everyone, really, I'm just going to go through all of these, show the performance. But I wanted to just introduce the 2 new ones for right now. That's our dividend focused portfolio and the aggressive stock portfolio. That's it. I know you guys probably have things to do, so I'm going to wrap it up from there. If you have any questions, you know where to find me. If you're one of my customers, if you have questions in general, you probably know what to do. Otherwise, I really appreciate those of you that came live today. I'm going to have this video sent out, of course, to you again. If you want to review it again, look out for that email tomorrow. And I'm excited. I'm really, really excited. I thank you for joining me. We will talk to you then. If there's any questions, let me know. I did see a couple posts, but no real questions. And I will stick around. But otherwise, cool, guys. Thanks. We'll be announcing more soon. So I will take this down. Oh, there's my big old head. Why is it so big? All right. I'm going to wrap it up. Talk to you guys later. Enjoy. Have a good night.